hey guys, thank you for joining today. Barbara, we're going to post the recording of this little while. So today we thought it'll be fun to talk about, you know, different entity types, what are the tax implications, and also, some of the frequent questions we encounter. So my name is Chakra. I run a small accounting and finance consulting firm focused on e-commerce sellers, most specifically Amazon sellers, but general e-commerce. So Barbara and I run this Jersey Amazon meetup, which hasn't met recently, but we are doing this online thing. And then, so today we thought we'll talk about this entity selection and what are all the pluses and minuses of each entity and some of the common questions we get. So, Barbara.
Yep. I'm Barbara Boshin, and I'm from CoMerchant. We have software to help you relist onto Walmart. And also for Amazon sellers, we have automated keywording, which is a great solution if you want to get wholesale and retail arbitrage listings sold faster. We automated the keywording of all those listings, so you can do what the big boys do in private label and get more relevant listings. Yeah, I'm really excited about this because I think a lot of people have asked me, and I've seen it in the posts often, like, should I be a single entity? Should I be an LLC, a partnership, an S Corp? And I remember when I made my decision, I don't remember all the details, but there were certain factors that were involved, and what you do can impact you as you grow, as you do different things with your business. So I thought since a couple of people have asked me, not fairly recently, what that structure looks like. It sort of came in the same conversation as the insurance questions. It's like, what do I need to have my business set?
Yeah. So, what we will do today is talk about the different entity types that are very common. There are some that are not used as much by e-commerce sellers, but we'll touch on them. And then what are the pluses and minuses? What different considerations you need to have when you're looking at business entity. Again, just a disclaimer, this is accounting discussion, but every situation is different. So you want to make sure you talk to your CPA, your accountant, make sure that that is the right decision for you, whichever path you choose to go.
But why even have an entity? Like, what is the point? There's S Corp, right, whatever. Why do you want to do that?
Right. So, most people start either Amazon, eBay, or Etsy businesses. Probably not anymore, but a lot of people used to start it as a side gig, right? When you're just doing a regular job or a side gig, if you want to, put a couple of things on Etsy and see what happens, or learning your ropes. Barbara, you bought a bunch of toys and put them on eBay. So those kinds of things, it's okay to start as what you call sole prop, right? Really, there's nothing to do. You're putting stuff on market to sell, and that is basically a company. There's really no difference between you, the person, me, Chakra, or Barbara, versus the company you're doing business. You can call it whatever you want, but in the eyes of the government, there's no difference. You are the company. So the advantage obviously is, there's no cost to it. You can just start today, any day you want. But there's no legal structure, right? So there's really, if something happens, then you're exposed. It is really good for people who are just testing waters, see if something you won't even bother doing, or maybe just hobby income. You're doing something and you really like baking cookies and selling in the neighborhood, whatever it is, right? Those kinds of things. So, that is what, IRS calls sole proprietor, right? There's no entity, you're just a proprietor for yourself.
So that's sole proprietor, and you just use your basic social security number.
Social security number,
you don't really have any protection, so to speak.
Right.
So if someone chokes on those cookies,
right,
you're kind of...
Yep. You can call, you can call it whatever, Jersey cookies, whatever you want to call it, but there's really no protection to it. And then when it comes to taxes, which is probably most of the decisions are made on entity for tax purposes, taxes are there's no difference, right? You're filing your 1040, your personal taxes,
Right.
just as before. You just pop your, let's just say you made decent income, if it's $10, $20, that's different. But if you're making any kind of income that you want to report, that's all just going through your self-employment. There's really nothing no different. Once you start making a little bit of money, next, a lot of people start thinking, and a lot of people who are starting on Amazon these days are thinking ahead and starting a company, right? There's different ways to start a company. You could be an LLC, a corporation. So we'll talk about LLC. Typically, that's the next level or next easiest to form. When you just have a little bit of income, a couple thousand every month, you may want to protect yourself a little bit now. So you would go out and actually create an entity where you get a EIN. Our first step is to register with your state, whichever state you're living in, home state. And that's where an LLC is formed. When you form this LLC, typically a lot of people just fill it online or have a CPA or an accountant fill that in. Most of the time, you pick a name and then you put an LLC next to it, and your company LLC.
Mm-hmm.
LLC stands for limited liability. However, just forming an LLC doesn't protect you from anything. If you're one person and you're forming an LLC, it's called a single member LLC. So one member. So an LLC is typically a state entity. And guys, like, Barbara, stop me if I'm just going off on some horrible accounting jargon. But so it's a state entity. That is, you're forming it, registering it, on your state website, like, New Jersey or Texas or wherever. And then you would go to the IRS and apply for EIN. However, in terms, that's when you're one person, it's called a single member LLC. In the eyes of IRS, they do not recognize an LLC. So they don't, for them, if you're one person running a limited liability company, there's no difference between a sole proprietorship and an LLC. A lot of people start an LLC and they assume that they have some kind of protection, which is not really true in this case. You have an EIN, maybe. You can even run the company with the LLC without an EIN, but let's just say you got an EIN. IRS is still saying, hey, this is one guy with an EIN. It's still going through his personal taxes, right? There's no difference. Let's just say you had a partner. Now you both are forming an LLC, right? Same process, but 2 people or 3 people or 4 people. Now it's called a partnership. So IRS says, okay, it's a partnership. It's not quite a same as sole prop, but then, if you, let's just say you're 4 people, $100,000 in profit, you split 25% each, and then it still goes through your individual taxes with a little bit.
Oh, okay. So if I was doing it with my house, like right now, our LLC is in just me. That's
so
when we started it, my husband wasn't working with me yet, and everything's his and mine anyway, because we're married. Mm-hmm. So that wouldn't make any difference. And
so as a partnership, only difference is you're really filing a different form called 1065 instead of just 1040 and Schedule C.
Yeah, because the software company is a partnership. So we file different forms, but then the accountant gives us back here's your piece, here's your piece.
Right. Yeah, they divide
to your taxes.
Right. And then you're putting it in your, so, LLC is called a pass-through entity, which means the company itself is not paying taxes, right? Whatever profit you make or loss you make is allocated back to you, and then you're paying it through your personal taxes.
So it still provides some level of it's still, I always say this phrase, pierce the corporate veil. It still provides you with some, like if somebody chokes on a button on teddy bear for me and sues the company, well, first we have insurance, so they take care of that. But they couldn't go past, unless they started buying like cars and furniture and things through my company, they couldn't go past that and get to my
so as long as you keep everything separate, right? Like, for that, that means that this is a good practice, even if you're running a sole proprietorship, right? You want to know what is the company costing you if you mix everything. So always open a bank account, separate bank account for the company. Even if you don't want to do, go and, tell the bank that, hey, it's a company account, blah, blah, blah. Use an account that you're not using, right? Like if it's just your person, if you have a second bank account, just don't put personal stuff in there. Run your, if you have a normal day-to-day thing, 8 to 5, 9 to 5, whatever job, put that to one account, and then, anything company related, put it in a different account. And if initially you are putting money into the company, right? Like we all don't have any big investors. So in that case, make sure your record, let's just say you put 10,000 in, make sure you're recording it, so that there is proof of how much money you put in.
Yeah, I know a couple people have referenced to me that they're telling me things I don't want to hear, but I'm not a CPA, so it's okay. Tell me whatever you want. But I'm like, oh, we got our couch. Like the business bought that for us. I'm like, yeah, you shouldn't be buying couches for your house with the business money. You shouldn't be, they're like, oh yeah, we buy the air conditioning through the business. I'm like, it has nothing to do with it.
Yeah. Like, so as long as, people get away with stuff, but it's hard. Yeah, if you go through an accountant or a CPA or, any kind of person who is responsible, they shouldn't be putting it in, let's just say that, right? They should be asking questions. But, if you're going to a tax preparer who's not looking at anything other than just punching numbers that you give them, then you can probably just get away with that. Anyway, so like I said, LLC again is not paying any company level taxes. Everything goes through you. And then, so at default, when you start an LLC, if you register, IRS asks you, is it a partnership or is it a corporation, right? So if you pick a partnership, that means it's an LLC. The next level is corporation, right? So, IRS IRS only has a corporation as a recognized entity, right? Which is a C Corp, which is what people hear about. Hey, this is a Delaware C Corp, blah, 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 all the big companies, right? But then there is a subchapter S election where basically you elect to, as a small business or a S corporation. There are a lot of a lot of advantages to that, but there's more paperwork.
No, so you got a C Corp and you got a C Corp subchapter S, which we call an S Corp.
S Corp, yeah. So default always for IRS is a corporation, which is a C Corp. Once you form the corporation, then you have to tell them you're electing to be an S Corp. A lot of people who do stuff on their own, DIY, we're all DIY, right? Like entrepreneurs are DIY. They go and register a corporation, never file the forms required with the IRS telling them it is a election to be an S Corp, please tax it as S Corp. So IRS will tax you as a normal corporation, C corporation.
What is the difference between that and that?
So yeah, so a C Corp is its own entity, right? It's not just like S Corp, it's also a separate entity, but it's not passed through. So if you make 100,000 as a company and you never elected to be as S Corp or a LLC, you're just a corporation, right? So the corporation makes 100,000. It has nothing to do with your personal taxes. The corporation has a completely separate tax return.
Right. And they have to pay on income they have to pay tax on that.
Right. So 100,000 profit, right? You're paying taxes on the 100,000 at 21% right now. Who knows what it's going to be, but 21% right now. So the balance is 79,000, right? Let's just say, hey, you got 79,000. You just take the 79,000 to your personal, in your personal account. That is called dividends, right? So the company issued you 79,000 dividends. Now you're going to pay taxes on that again. Whereas an S Corp, you're not paying any taxes at the company level. Whatever comes to you as salary, that's the only part you're paying taxes on. So it's a double taxation you're avoiding by electing to be a small business or S Corp.
So why wouldn't the LLC, why wouldn't everybody just want to be an LLC or an S Corp? I'm so confused.
Yeah, so they all should be, or most should be. So the main reason is an S Corp. So for most Amazon sellers, it doesn't matter. But let's just say, you're starting a company and you're expecting to get investors. right?
Mhm.
An S Corp can have a maximum of 25 partners.
Partners.
Whereas C Corp can have unlimited. So you can issue shares, millions of shares, just
Okay.
like any other big company, right? So that is the big difference between an S Corp and a C Corp.
What's the diff? I don't even understand what the difference between an S corp and LLC is.
So an S Corp, so they're both pass through. That part is the same. Again, like I said, single member LLC, there's really nothing there. If you have a single member LLC, it is a sole prop for all practical purposes. So if you have a single member LLC, then you have to elect to be taxed as an S corp. You have to tell the IRS, file the forms, and say, "Hey, I'm an LLC, but please tax me as an S corp." At that point, it's kind of a best of both worlds, right? State level, you have the LLC, which means low maintenance. Usually, there's a little bit of a annual fee, but beyond that, nothing.
Right.
But at the federal level, you are getting taxed like an S corp. So that's somewhat of best of both worlds. But yeah, most people, typically for most Amazon sellers or any kind of e-commerce people, either one of these two entities should be.
It doesn't much matter,
default.
right?
Yeah, default choice should be either LLC or an S
As
corp.
an S corp, you can be an employee, but as an LLC, you can only be an owner.
Yeah, so I'll get to how you get paid, right? Like, so.
Okay. Because it made a big difference with like the PPP loans.
Yep.
Because I could not be an employee.
Yes.
Or collect
If you're
unemployment.
sole prop, right? Like, so let's go back from the beginning. Sole prop, there's no difference. You make 100,000, it's all yours. There's no salary. It doesn't matter what you do.
Mm-hmm.
You made 100,000, you're taxed on 100,000. LLC, you're not even allowed to take salary. So you cannot go and take a W-2 salary. So whatever you make, if you're a single member LLC, like I said, it's the same as sole prop, no big deal. It's the same.
You get a draw.
You can just draw. You can only draw. You can pay any which way you want, except as a W-2 salary. So you can draw money, whichever way you want. But LLC members, there's no salary because you're a member, you're a partner, whatever. An S corp, you have to take a salary if you are if you are one of the owners, controlling partners, whatever it is. You have to take what they call reasonable salary, right? Now, reasonable salary is pretty not defined because IRS does not give a definition of what a reasonable salary is. There are consultancies out there, all they do is calculate reasonable salaries for people. That's kind of going overboard for most small businesses. You can, if you're in the 30, 40, 50 range, typically you're fine. It used to be that, a lot of CPAs would say, hey, if you're taking 25 to 30% of your income, that's reasonable, you're good to go. But you can go a step more than that, just to cover yourself, right? Like if ever IRS questions you, look at your schedule for a month or 2 months or 3 months. So Barbara, you're packing boxes for, let's just say a typical week, you're packing boxes for 10 hours, right? And then kind of running the company, being a CEO for 10 hours. 5 hours you're driving to drop boxes, whatever, so
it's a good day if I do all that in one. It's more hours than there are in a day. No sleep.
In a week. And then 10 hours, let's just say you're doing marketing, right? Like you're checking the keywords and those kinds of things. And 5-6 hours, you're being a programmer. You're making sure. So you kind of look at all that and just say, what, like if a typical CEO for an e-commerce company, doing $3-5 million is 100,000. So you kind of come up with a rough estimate. Marketing guys, I would pay, like, what would it be if you stopped doing the work and paid somebody, right? It's, $50,000 for marketing or something. So
let's say I say all that stuff and it's $50,000 a year. So that's the salary I'm going to draw. And the company made $300,000, paid me $50,000. That means it made $250,000. The $250,000 they still have to pay taxes on.
Yes, as a company. So the company would,
company.
So the 50,000 that you took as let's just say it's S Corp, right? So sole prop, you take 50,000, 90,000, it doesn't matter. You pay tax on all 100,000. When it comes to S Corp, you take 50,000. On that 50,000, you have to pay it as a W-2 to yourself, right? So the W-2 salary, you would pay your normal FICA and all those things, right? And then, the rest, that's the profit, right? You can remove. So that 50,000 you took out, you pay W-2 salary, W-2 tax,
And taxes get paid to the government for that,
right.
less
And
your
then the rest of the 50,000 is the profit. That will come to you as a person on your 1040, gets added to say, let's just say your husband's salary. And then let's just say you took 50,000 and then your husband made 100,000 from his job. So that's 150,000. You would take salary on that, right? Whatever, 24% tax rate. Right. And then this W-2, you already paid like the payroll taxes, right? Whatever, employee and employer portion, because you're both. So the big difference between an LLC and or self-employed and the S Corp is the savings on self-employed, because you're paying self-employment on $100,000.
Okay.
Which is almost
self-employment tax, and then when COVID hit, I wasn't unemployed.
Yeah, I know. Those are the things like really big advantage for an S Corp, right?
Okay.
Because
and I could, as an employee of myself, I could have gotten unemployment too if we were closed.
Right.
That whole
unemployment, right? Unemployment because I guess, they were self-off. I don't know. Maybe.
Well, there are some people that had to. They didn't have any business.
Yeah, exactly.
There's no reason
it's
for
an
them
easy
to work.
call for PPP because you can show your W-2. Outside the tax purview, like even if you're going to, let's just say you're getting a home loan, right? Those guys, everybody wants to see a W-2 income, even today.
Okay, yeah.
Yeah, so if you're drawing a W-2, you don't even have, the minute you say you're self-employed, they treat you like, oh my God, like that could go away tomorrow. Like W-2 jobs are forever. That's whatever.
But when you say I'm employed by myself, it's better.
Yeah, you can just say for example, I go somewhere, I just have applied, I'm employed by Jungle Books. Yeah, as a CEO, that's fine. And then I show my paycheck I'm drawing, and that's it. I'm not even bothering to talk about the company at all because they don't need to know. They don't care. They're just seeing a W-2 that I'm getting from ADP, and that's it.
So if you are an LL, I don't mean to make this barber's consultation, but just trying to figure it out is the way I figure it. If you are an LLC and you wanted to become an S Corp, can you do it, or do you have to go re-register and start over?
No. You can do it. We do it all the time, right? That's one of the things we do. Little plug. So we do it all the time. In fact, let's just say you, Barbara, came to us and said, hey, this is what I'm doing. Can you file taxes? In fact, we just had a consultation today. So the gentleman was a sole prop. In first 2 years, it was fine. They were making, they were doing RA and the amount was very small, 10,000, 15,000 net. Now suddenly it just exploded post-COVID. And last year, I think 2020, they made close to $500,000. And I'm like, sales, not profit. But I'm like, it doesn't make sense for you to be this. I don't care if you're late. Let's go back and file for S Corp. And you're like, well, I didn't know, nobody told me. So you could save a lot of money by, going that route. Not only that, not the basic taxes is one thing.
I want to talk about this because I've been with the conversation I've been have with you anyway, but I'm mad at myself.
Yeah, beyond the basic taxes, and S Corp opens up a lot of other avenues to save taxes. Because you're now an employer, you have an employee, which is yourself. You can give yourself a lot of benefits. All those things are tax deductible. and will reduce the taxable income. Even though you pay a little bit on employer taxes, overall you save a ton of money just going the S Corp route.
So I could be the benefits that I pay a ridiculous amount for now become a cost of the business?
Yes.
And not, okay, well, we'll be talking tomorrow.
Yeah.
Really mad at my CPA right now because you don't know how much money I pay in benefits. It's so much money.
Yeah. So yeah, it opens up. That's why, like, especially like for, let's just not to completely digress, but when Trump tax cuts happened, and corporate tax for C corporations came down from whatever 39% to 21%. A lot of people thought like, oh, C Corp is going to win, all the time, right? Because now suddenly the tax rate is half. But even with that, if you take a longer view, S Corp still wins because there's so many avenues available to you that just not available for whatever reason to LLCs or.
So what would be then? Why do most people stay as an LLC? They just don't know.
They just don't know, and So this is my soapbox / rant for 2 minutes, if you may, if I may. A lot of people just go to a tax preparer and give them their stuff and assume that they're doing everything to save you taxes. A typical model for a normal CPA is they're doing 500,000 tax season because they're saving the whatever, those 3 months they're killing themselves and they want to be gone by May, they want to take vacation. They just don't have the time to do it, right? And it's not like they don't know. They may know, but just don't have the time because that's their business model. They're charging you low. They charge you 300, 400, 500, and they're not. So yes, yes, Tom.
Are you able to prepare in California? Yes, you are.
Yes. So yeah, so it's not that there's nothing they may know, but they just don't have the time to do it, right? Like we don't do that. We do bookkeeping and then we do taxes for the bookkeeping clients for the most part. We have 1 or 2 clients who are not bookkeeping, but so we have more time. We take time to go through all your situation, and we are looking on the other side too. Like we are looking at your books, so we know what other things we can do to help you. But anyway, don't mean to be like an extended ad or anything.
It's commercial. I know you don't want to toot your own horn here, but you also look at it as a business manager.
Yes. Yeah.
Right.
Yeah.
So it's not. So anybody who's watching this interested in Jungle Books, I will toot your horn. What Chakra's company does is not just do bookkeeping, not just do your year-end taxes. All those things are both very, very important and two things I really hate doing. And I have a financial background, so everybody goes, "You're supposed to love that." I'm like, no. I don't even like telling the bookkeeper what the checks are for. There's no way I have to do that. But he also looks through your account and will give you an analysis like, hey, here's all the software you're using. Are you using this software, or are you just paying the fee? Or here's, I look at my other accounts and they're spending this much on the ratios. Your ratios are this much, those kind of things. So, yeah, I have to get off my butt.
Coming from like my own Amazon business, even though it's very small now because we're just focused on this, but I still see those. So, so those are the main reasons. So can I step back and we get a lot of, lot more and more non-US sellers are selling in the US, right? Through Amazon. So can I take like 2 minutes to talk about that? So, a lot of non-US sellers come in and they just want to start. And the other thing I want to talk about is, these are some of the questions we get all the time,
I was going to say, what questions, I only know my questions. What questions do you get asked often?
Yeah. So like number one is, hey, I have, this is my name of the company, but my brand is this, right? So for the most part, I say, pay the $50 to the state and register a DBA. It's always good to have that name in the state. In the state records.
You get a nice little form that says change of name form.
You don't need to change it. You're adding a D. It's doing
No,
business.
but to them, it used to be ABCDEF company. Now it's ABCDEF company DBA, something.
Right. Exactly. So it's not expensive. Once you do it, it's there for a year. For I think New Jersey is 5 years. So various states have different things, but you definitely want to do that, because if you don't, somebody could register that as their own company name, and you would not be able to get it. Right. So a lot of times, some states are pretty loose. They will let you have a DBA even if it's registered, but a lot of states don't. So you just, state dependent. The other thing is, okay, I'm just looking at the list of questions I wrote down. A lot of people listen to, podcasts or business podcasts, which is great, but a lot of people advocate, hey, go register in Wyoming, go register in,
Delaware,
Nevada, Delaware.
The big one, right?
Right, Delaware, yeah. So it's great. Like Delaware is preferable for a lot of C corporations, just because there's a lot of a lot of people assume it's for protection. For Delaware, they have a good long track history of court decisions that support businesses. So that is the real reason people need to go to Delaware as a C
that
corp.
their company is governed by the laws of Delaware, which are favorable to corporations, versus California, which I imagine is the opposite, without even knowing.
Right. Or Jersey.
California, and New Jersey is a nanny state, so that's a different thing. California business is bad.
But the main thing is, a lot of people when they do it, is that there's really no real advantage, honestly. So let me split this question into two. Number one, if you're a normal business, right? If you're a normal business, it makes no sense, because you still have to register in your home state as a foreign corporation. Now, because you're not registered, this is not your home state, you may miss out. Like, for example, when COVID happened, New Jersey gave out grants. You had to be a New Jersey company to get those grants, right? You will miss out on those kinds of things. Beyond that, that's not a regular event, hopefully, COVID kind of situation. But beyond that, when you still have to pay taxes in New Jersey, even if you register somewhere else, because you're still a foreign corporation, you are actually residing there, right? So you still end up paying, like in California, you may end up paying the franchise tax and those kinds of things. The second thing is, but if you're an e-commerce business, it may make a little bit of sense, because you could potentially say, and it's a hard sell, because states could come back and say, you're just doing this to avoid taxes, right? Let's just say you're in Mississippi, and 0.5% of your total sales is in Mississippi. And so you register yourself in Texas, your home state is Mississippi, and that's only 0.5% of the sales you're paying on. Again, it depends slightly state, or so you have to talk to a attorney, talk to an accountant, and make sure that makes sense for your state. So like California, for example, if you're registered out of California, let's just say you were getting 20% of your sales from California, you would only pay sales, taxes on those 20%, 80%, you would kind of shield. However, again, California is very aggressive with their tax, collection. So they may come back and say, it's a little bit of a risky strategy, but they may come back and say, hey, this is just a tax avoidance. But in general, as long, you still need to register as a foreign corporation. So a lot of times it just does not make sense to have a company in somewhere. Then you have to hire like a registered agent there. You have to maintain an address. So it just becomes a lot of extra paperwork. And most people just don't want to do the junk paperwork, right? You want to run your business. So that's one. Now, it makes a lot of sense if you're out of the country, you don't have any domicile in any of the US states, then it doesn't matter. Let's just say you're running the company you're sitting in Romania or UK or London and registering a US company. At the time, any state is fine, because you're not domiciled in any particular state. At that time, it makes sense to do Wyoming, those kinds of things. Do I need a EIN if I'm a foreign seller? If you're a US seller, you have to have an EIN. and you always register for your home state sales tax. Especially, Barbara, something like that, you know that you don't want to, for resellers and all those things, you don't want to pay those taxes, right? So you need to have a registration in the company to get the reseller certificate
Right.
But if you are, even if the state, Amazon is collecting your sale, I'm a little bit all over the place, but I'm just looking at the list of questions I get. Even if Amazon is collecting for your state and paying, you still want to register for your state's sales tax at least, because even if it's a zero tax, you have to file the state tax return, sales tax return. Change of entity. That's something you have to be a little bit careful. When it's absolutely possible to go from one entity to other entity anytime. However, let's just say you're a S Corp and you want to, Barbara, the keyword company just takes off and there are people lining up to give you money to,
That's good. I like this. Keep talking. Keep talking.
So they say,
you got their names and numbers. I need to call them.
You know what, like Barbara, we're like, we are giving you, so much money. We want to make sure it's a C Corp because we want to attract more. At that time, let's just say you're an S Corp now, you can change to C Corp. However, and for 5 years, you cannot go back. So once you change the entity, let's just say to a C Corp, you cannot just turn back next year and say, hey, I want to do something else. Right? So that's something. Wait. But
sort of like a cash and accrual basis.
So
you can't switch back and forth because you feel like it.
Right. So, and then you want to make sure that, so you're considering it very carefully. Now, there's, for the most part, you're going to an S Corp. There's really no reason to turn back to an LLC or anything like that. So, and then cash and accrual is one thing. You want to make sure that when you switch, you got to be careful there. When you file the forms, 5 years, you can't turn back. Those are all the questions I have. If you're a foreign seller, you cannot be you cannot be an S Corp. Only two options you have available are you're an LLC or a C Corp.
Okay.
So those are the two main options you have available. If you're a partnership,
sounds like I have some work to do, or you have some work to do. Somebody has some work to do. Probably won't be me.
So yes, so those are the typical questions I get. If you have any other questions, happy to answer.
I don't think so. Does anybody want? I'm looking at the chat. We're pretty good. Yeah, no, I think this is great. I mean, I really just wanted to get somebody to have. This is a question I've had in my mind. This is a question that pops up all the time, and I have no answer. I'm like, I don't know the difference between the two. I sort of go numb when we start getting, it's like insurance too. We talk about life insurance. About 3 sentences in, I am dead. I was like, if that, but not this. But then here, I'm like, oh, shouldn't be this hard. This actually was pretty easy to comprehend.
Hey, Barbara, I have a question.
Yeah, sure.
Go ahead, Fernando.
Yeah. I have an S Corp. I've had it probably since 2 years ago. We notified the IRS, so that part check. But the company in the last 2 years hasn't made a profit, or if it has made a profit, it has been very little. I believe last year we claimed a little bit of profit. But I've never, or I believe that we've never filed W-2. So, what could be the deal there?
Yeah, so if you're not making money, there's a little bit of case to make. Even though S Corp, you're required to take W-2 salary. But, it could be as little, if you're only making, let's just say $5,000, right? Then taking $1,000 or $2,000, whatever a salary, they can't really argue, even though it's not reasonable. If you take more, you could go into loss. If you're a loss-making entity, then there's really not a lot of, you just can't afford the W-2. They're not going to come back to you that, hey, why are you not taking salaries? let's just say, 5 years you run the company, and every year on the books, you're showing, 20, 30, 10, $40,000 losses. There's no money to take a salary, right? So, what are they going to say? So I haven't hired anybody come, get a letter from IRS who is making a loss and is not able to take a salary. Hey, why are you not taking salary? So, yeah, ideally that won't be a situation for long, and you can afford to take more. But yeah, if you're loss making, there's not much you can do.
Isn't there a line in the balance sheet or in the balance sheet that is called like sweat equity, that isn't that something that we could use or hey, I didn't take a salary, but I put $40,000 worth of work in here.
So sweat equity is not something I actually never asked. Nobody ever asked that question. I don't think it's like a real equity that IRS will recognize. If you put money, that's one thing. But I mean, if it's a in kind, I don't know. I don't think it's a recognized balance sheet item, as far as I know. But that's a good question. Nobody ever asked me that. Every entrepreneur puts in a lot of time that's not paid for, right? So I don't know. It's not something you can take, put it on a tangible balance sheet.
Okay.
But what is the advantage though? Let's just say IRS said, hey, Fernando, I'm going to give you calculate your time at $100 an hour. You put 40 hours a week, got nothing for it. So what's the advantage for you if you put that in?
So what I was thinking is, okay, I didn't make any money, and I didn't took any salary for the last 2 years. However, I put, let's say $40,000 per year worth of time. On year 3, when I'm actually making money, my income P&L shows $100,000 worth of profit. But I had 2 years I didn't take any payment.
Maybe. Well, all right. So maybe it sounds like this. So you could have a liability on the spreadsheet, on the balance sheet, as owed compensation, right? So you could, as a salaried employee that didn't take a salary, you could put a liability on the spreadsheet for years 1 and years 2 of say $40,000 each year, right? So now you have a liability $80,000. In year 3, when you make $120,000 and you pay off that liability plus the current year's salary, your net. I don't know if this is legit, Chakra. I don't know if I'm making stuff up here, but then you wouldn't pay. Because basically you didn't get a salary for 2 years. In year 3, he gets $120,000 salary, which really is the salary for 3 years. So from the company perspective, they made no money again. But I don't know how that works out.
Yeah, so salaries payable is a legitimate item, but for owners, salaries payable put in there, I'm not so sure how that works. I mean. That's one thing. The second thing actually kind of related, but when your S Corp is filing taxes, balance sheet, make sure your accountant or whoever is calculating, especially if you're making your sales are over 250,000, make sure there's like a basis calculation done, because let's just say down the road, let's just say next year, Fernando, you make $100,000, and then you take out like 80 or $120,000. You say, you know what, like I haven't paid myself in 2 years, I'm just going to pay $120,000 to myself, right? If your basis, if that's more than your basis, then IRS will say, well, that's not a real draw, that's a salary, so I'm going to pay. You got to pay taxes on it, because so the big benefit of S Corp is that you don't have to pay taxes, self-employment tax or anything like that on the money you're for the whole amount, right? Like you're taking a salary, and then let's just say you took 100,000, but you call 50,000 as salary, 50,000 as draws, right? You pay only the W-2 as 50,000, but you take other 50,000. That's not an expense. So you can't show it in the profit and loss. It's just it goes against your equity in the company. And let's just say you don't have that kind of equity. Now IRS could come back and say, hey, you know what, you have an equity of only 25,000, you took 50,000 out of it. So we're going to call this a salary and you got to pay tax on that. So just have to be a little careful, make sure you're always, every year, your basis is calculated and you want to make sure that you don't exceed that basis.
Mm-hmm.
Somewhat related, but not quite the same.
Yeah. Mm-hmm. Thank you.
Okay.
All right.
I have a question.
Thank you very much. Oh, you have a question?
Yeah. Well, maybe more like advice, and I know that you can't give tax advice, but so I had an LLC with pass-through taxation in 2016. We elected for S Corp taxation under the LLC, which at the time we were making money, the business was going up, I was turning a profit. In 2018, though, it took a hit, and I think you mentioned this earlier, and I think this is why my CPA hasn't been able to do this, but this is just a rough question, but I can't switch back because of the 5-year thing, right?
I don't believe so, but we can look at it. Yeah,
because it's been since like 2018.
And what's the point, though? Why do you want to switch back?
I don't know if there's a maximum on how much NOL you can take, but I have like several $100,000 in NOL. So on the personal side, I'm suffering too because I'm bleeding money into the business, yet I'm still paying taxes because of the W-2, and I don't get a refund or anything because we elected for S Corp taxation. So the business itself is literally carrying a tax credit, but me personally, W-2, I'm paying taxes, which sucks because it's hard to afford when your business isn't doing well.
Right.
So, I mean, I've talked to the CPA about a few things, like should we dissolve the LLC and start fresh because this LLC has actually had a lot of problems, and it's kind of riddled with debt and other problems that come with losses like that. So I guess my question is, I didn't realize, or I didn't know the 5-year thing, or if that's even a case. Like maybe I didn't understand when my CPA said, well, it's too late now or something. But yeah, I'm trying. I mean, we're getting close to the 5-year mark since I'm making that election. In fact, this tax year is the 5-year mark. So I need to figure out, like, going forward what to do. Should I try to just stay with the same LLC that I have and dig it out? Is it a better, because we're having other issues where like ADP won't even approve us for direct deposit because the credit looks like crap for the business. So we're into that territory and it kind of sucks. So I'm like, okay, well, do we start over? What do we do here?
Yeah, we can look at it. I mean, there may be, dissolving, you won't have any kind of NOLs. You can,
well, dissolve and start a new one. So like for 2021, set up a new LLC, file taxes under this year, or just leave this one and kind of migrate everything to the new LLC under whatever taxation method makes sense. I mean, I don't know, like COVID kind of set everybody back. I didn't expect 2020 to be a crappy year either. So, I thought it was like, okay, 2018, we had some issues. 2019, we had just moved, and usually every year that we move our business, we ended up with a giant loss. But 2020 looks like a pretty big loss too. So it's like at this point, I'm not really sure which way would make sense to kind of go on that.
Yeah, we can take a look at it. I mean, I think the main thing is we can see how much loss you have, how far you can carry that, and then do you not want to take salary at all? Like, is that
I haven't been able to really for since 2019. So it was like what Fernando was asking, like if you had a loss for 2 years, and I didn't really know what to do. I was like, can I take draws? Like you said, it's easy to show like that we didn't have cash. We were cash flow poor. So it was impossible for me to take a salary, especially since I think one of the requirements is you actually have to pay yourself more than your highest paid employee as the CEO. So
it's reasonable. I mean,
yeah,
that's not, like for example, let's just say you're hiring a consultant, right? And to do some like I mean, you wouldn't go do that. None of us would do that. But let's just say you got a McKinsey consultant, they're going to charge you $300-400 an hour, right?
Right.
So that would exceed anybody's salary. So I never come across that rule. I could be missing something, but
yeah, I don't know. Maybe it's a California thing. It was a W-2 rule where like I had an onshore coder who I paid $72,000 a year. So if I paid myself a reasonable salary, even when things were good, I had to pay myself $73,000 a year so that I was above him.
Okay.
Yeah.
Maybe that's a state thing. I have to look into it. I don't know that.
Yeah, I'm not. At some point, somebody told. I think my CPA actually told me that, but again, I don't know. I use a small town CPA. So
yeah, I mean, reasonable salary is very amorphous.
Right.
You're paying a quarter, but as a CEO, you're doing 50 things, right? It's not one thing.
Right.
So really, I mean, that's the reason IRS leaves that kind of open, because they never defined it. Because small businesses, you never know. I mean, you could pay your employees more than you do, because sometimes you just don't take anything, but you still have to pay the employees, right?
Right.
So that's
you have to make payroll.
yeah, just to make the payroll, right? Like there are some crappy months, for example, if you're running and you still have to pay the employees, and you may be able to not take any money out. So yeah, it must be a California thing. I don't know. IRS doesn't definitely say that.
Okay.
But
and then if in my situation where I had a W-2, or I should be taking a W-2, but I take a draw, how is that eventually taxed unless I put it back in? So if I can contribute it back, it's a wash at that point, right?
Yeah. So if you're just taking money out, it's just owner's draw, right? Like you're just going against any kind of equity you put in there. Let's just say you start at 100,000, and the good years, let's just say you started the company with 100,000. On a good year, let's just say you made another $100,000 profit. Your equity went up, and then the next year you don't have that good a year, and you want to take 50,000 out. It just goes against that equity. So your equity, goes up and down. And that's what I was talking about. The basis, like IRS has a very specific calculation on what goes into plus for basis and minus for basis, and then you want to just keep track on of that. And honestly, if you're making a loss, and if you're not affording to take a salary, then I've never had IRS force you to take salary, because hey, it's a small business.
Yeah.
You don't have the salary, you don't have the funds there to take a salary.
I know when we switched to S Corp taxation, it was kind of a mess, because I think there was some outstanding equity or something like that. So she had to book it like a loan that I have to pay back eventually to the company. So I didn't end up owing a ton of taxes on it. And I was like, is this the right way to do this? And she's like, it's what we have to do right now to do this. I'm like, okay. So now theoretically, I have a loan that occasionally I contribute back into the business. And I guess the loan was because I didn't have enough equity in there for what I had outstanding. Is that probably why she did that?
If you were converting from an LLC to an S Corp?
We were an LLC, and then we converted to S Corp taxation for the LLC.
Okay.
So we filed, I forget what form it was. We filed it with the IRS and wait for them to approve it. Yeah.
Yeah, 2553. I mean, I have to see it. The reason being that could be a reason, or maybe the way she set it up, it is like you're, dissolving or moving the assets into an S Corp. So it just depends on the way they did it. But there are 2 or 3 ways to do it, and then maybe she's just moving the assets into an S Corp, and that's the reason she had to set that up that way.
Yeah, I think whatever she did kind of worked. I a few times I've tried to shop around for another CPA, and I went to one time with all my tax returns and stuff, and I told him like about the loan. She's like, oh, that was actually a smart idea. So whatever it was made sense. I don't know. Never S Corp taxation, like I understood everything when it was passed through and it was really simple. It was like, here's your expenses, here's how much money you made, subtract each other. That's how much your net profit is. Now with this S Corp taxation, I'm like, I have no idea what's happening. I just look at gross sales and try to make that number go up, and then make sure that the number in the bank doesn't go too far down.
Yeah. Oh boy.
But yeah, I mean, I guess that's the point though, right?